Hey guys, Barry Page with today's Tuesday tip, Financial Wisdom. Do what banks do. My late mentor Nelson Nash said banking is the most important business in the world. So we have to start thinking like bankers. So what do banks do? How do they make money? Banks make money using other people's money. Most people understand that banks make money by loaning money and charging interest and fees to do so. But when I ask people how that actually works, things get a little fuzzy. Typically, some people respond that banks make money with the spread between what they charge on interest versus what they have to pay in interest to people holding money on deposit. And that is true, but there's much more to the story. Banks are in the business of loaning money. Banks are in the business of making money, literally. Here's the dirty little secret. Banks can loan more money than they have on deposit. And by doing so, they are literally creating money out of thin air. They are making money. You can read my blogs and posts on the Federal Reserve and fractional reserve lending on our website, legacyinsuranceagency.com. Just go to the blog there and search for banks or fractional reserve lending, and you'll have plenty to read. For more in-depth learning, you might also want to read Murray Rothbard's classic, The Mystery of Banking. Where do banks store their money? It's more than ironic when people discover where banks store their Tier 1 capital. Banks don't follow conventional wisdom when it comes to protecting themselves from risk. The vast majority of banks in the United States follow the FDIC's recommendation to own BOLI. That's bank-owned life insurance. BOLI is a tax-favored asset that banks own to offset risk and financing employee benefits. A bank's Tier 1 capital represents its equity and reserves. It is the core capital that measures their financial strength. Banks utilize BOLI because it's safe and it produces better results with less risk than they could otherwise achieve. Where do banks store their money? It's more than ironic when people discover where banks store their Tier 1 capital. Banks don't follow conventional wisdom when it comes to protecting themselves from risk. The vast majority of banks in the United States follow the FDIC's recommendation to own BOLI. That's bank-owned life insurance. BOLI is a tax-favored asset that banks own to offset risk and for financing employee benefits. A bank's Tier 1 capital represents its equity and reserves. It's the core capital that measures their financial strength. Banks utilize BOLI because it is safe and can produce better results with less risk than they could otherwise achieve. Interest and fees. Banks charge interest on loans they make, and consumers happily pay it for the convenience to purchase on credit. Few people have the discipline to save first and pay for their purchases outright. But even if they do pay cash for their purchases with their savings, they are then killing the goose that's laying golden eggs. We hope that our money is stored in a place where it earns a return. We save our money in accounts, and once that account is emptied, the money is no longer earning a return. In his book, Becoming Your Own Banker, Nelson Nash makes it abundantly clear that we finance everything that we buy. We either pay interest to someone else for the use of their money, or we give up the ability to earn interest otherwise. While banks like to confuse us with ever-changing interest rates, it's the volume of interest that we pay over time that makes all the difference. It's not the rate. You may have wondered how banks earn money on debit cards since you don't normally pay interest on these cards. Well, the merchant pays the fees in this case. And perhaps you've used an ATM that's not your bank's or it's not in their network, and you may have paid these fees yourself. Banks understand that $2 to $5 really isn't enough to upset most people. But over time, and of course with thousands or even more depositors, that becomes quite a substantial amount. So when you realize also that $4 on a $40 ATM withdrawal equivalates to 10% just for accessing your own capital, then it's easy to understand that these fees can add up quickly. And if you've ever purchased a home and got a mortgage, or perhaps made any other large loan, you paid closing costs and other fees because of that loan. How to make money like the banks do. Now that we understand, or at least have a basic understanding of how banks make money by leveraging deposits and charging interest over and above their costs, we can use that same strategy in our own personal lives or in our business. Obviously, a family is not a bank, in the sense of a brick and mortar piece of property with employees. We can, however, think of our family's finances as our own personal economies. And if we do, then we can start to understand how to use the same principles that banks do. We can learn from banks in these ways. First, banks store their capital in a safe place. Banks earn and think long term, resisting short term speculation. Banks avoid risk by holding safe assets that cannot lose money. Banks own life insurance for tax benefits. Banks utilize leverage when loaning other people's money, OPM. Banks understand the velocity of money, so they turn their money regularly. So if we can start to think like bankers and first protect our money from loss, then we can leverage it to do other work. By collateralizing our accounts, the money can continue to grow, and we can use other people's money, OPM, to fund our major purchases. And by repaying the loans, just like we would repay a bank or financial institution, we can recover those payments to use over and over again. By thinking like a bank, we can utilize our proceeds for business or worthy investments where we can actually profit. Taxes are a whole other issue, and they can also help us to offset costs by thinking like bankers. And all those other assets, certain assets may produce larger returns. Net after-tax income is really the bottom line. So hopefully this has been helpful to help you understand banking and how banks work. And I hope you'll tune in next time and join me regularly, where we'll have weekly content and updates. And I hope you'll comment, like, and share this on social media. So until next time, I'm Barry Page, your life evangelist.